Next problem, problem number 10. Mr. Surendra purchases listed debentures of ABC Limited on 10/3/2014 for rupees 40,000. Mr. Surendra dies on 3/4/2016 and as per his will, debentures of ABC Limited are transferred to his son Sumant. On 1/3/2019, that is in the previous year, Mr. Suman sells debentures of ABC Limited for rupees 98,000. Expenses on transfer is rupees 2,000, that is realization expenses or transfer expenses. Find out the amount of capital gains chargeable to tax for the assessment year 1920. So here in this problem, the assessee has received the capital asset in the form of will. So the period of holding will start from the date where the asset has been purchased by the previous owner, because the assessee has not purchased the or not received the asset by paying the amount or the consideration. So the period of holding should be start from the date of purchase, and the period of holding should be end by the date of sale. But the assessee will be the person who is going to sell the asset. Clear? Now the assessee is Mr. Suman, status resident, previous year 1819, assessment year 1920. Now calculate the capital gain, that is taxable income from capital gain. So if in the problem they have given the debentures as a capital asset, even though if the debentures is in long-term capital asset, we are not going to calculate the index cost of acquisition, because for debentures the index cost of acquisition will not be applicable. So instead of index cost of acquisition, we are going to take the cost of acquisition even in the case of long-term capital asset. This exemption will be applicable only for debentures. So whenever if they given the debentures in the problem, the index cost of acquisition will not be applicable for debentures. Only the cost of acquisition has to be taken. Clear? Next, asset listed debentures period of holding start from the date of purchased by the previous owner and end on the date of sale, that is 1/3/2019. So if you check, the asset that is listed debentures will fall in the category called as financial asset. So as per the financial assets, the condition is if it is used for more than 1 year, it's a long-term capital asset. If it is used for less than 1 year, it is a short-term capital asset. Since the asset has been used for more than 1 year, it is called as long-term capital asset. So calculate the capital gain income. First take the value called as gross sale consideration. So the asset has been sold in the previous year for rupees 98,000. So that will be the gross sale consideration. From that, minus the realization expenses. So the realization expenses they have given in the problem, that is 2,000 rupees. So take 2,000 as in realization expenses. So after minusing the realization expenses, you'll get the value called as net sale consideration. So the balance amount is 96,000. From that, minus the cost of acquisition, because the given capital asset is listed debentures or debentures. For debentures, the index cost of acquisition is not applicable. Only the cost of acquisition or cost of improvement has to be taken. So cost of acquisition, since the asset has been purchased after the base year, that is 1/4/2001, so the purchase price will be the cost of acquisition. So the cost of acquisition will be the 40,000, which has been incurred by the previous owner. So take 40,000 as a cost of acquisition, and in the problem they are not given any improvement or addition value. So the cost of improvement will be taken as nil, and from net sale consideration, if you minus 40,000 as a cost of acquisition, you get the gross capital gain of rupees 56,000. And from that, claim any exemption if applicable. So there is no any point of exemption or any information regarding the exemption in the problem. So exemption will be taken as nil. So the net capital gain is 56,000. So this is the income from long-term capital gain, and the note says that index cost of acquisition is not required for debentures.